Hello. Today we're going to analyze Welspun Corp Limited. This is one of the largest manufacturers of large diameter pipes in the entire world. So today we're going to analyze this company's growth guidance, how fast it is looking to grow in the near future. So let us first of all, let's discuss the traditional financials of the company, the past financials of the company. Here we have the P&L of the company from 2014 all the way to 2025. Here we have sales, operating profit, and operating profit margin. And then we go downwards, we have net profit. So in 2014, the company had sales of 7,705 crores. We move all the way to 2020, sales of only 9,957 crores. Okay. We move all the way to 2025, we have sales of 13,978 crores, 1,684 crores of operating profit. Okay. 2,262 crores of profit before tax, which does not make sense. How can operating profit be less than profit before tax? Not is that not saying that it does not make sense, but there was an exceptional one-time income around 800-ish crores, and which boosted net profit to 1,902 crores. Right? In terms of percentages, the compounded sales growth has only been around 5% over the last 10 years. Last 5 years, 7%. Last 3 years, post COVID, 29%. And TTM, trailing 12 months, meaning the last 12 months, minus 1%. We move to the compounded profit growth. Last 10 years, 32%. Again, again, this last 10 years is comparing it to fiscal year 2025's financial results. And fiscal year 2025's net profit was boosted by some 800 crores of exceptional items, so that reduces the overall net profit by that exceptional one-time income a lot. These are a bit boosted kind of numbers. Not saying they're wrong, but they're a bit boosted. And the return on equity has also seen, see, 11% 10 years ago, 3 years ago 15%, 5 years ago 14%, last year 19%. It seems return on equity has seen a solid rise. Now, we talked about these numbers. Okay. Remember one thing, the sales were 13,978 crores. The EBITDA was 1,684 crores. Let me just confirm this other income. Yes, 800 crores of exceptional item. Now, what is the future growth looking like? This is the guidance. All right. So for fiscal year 2024, they had given guidance of 15,000 crores in revenue. They surpassed that. They reached 17,000 crores. They had EBITDA guidance of 1,500 crores. They surpassed that. They had ROCE, return on capital employed guidance of 16%. They surpassed that. Fiscal year 2025, they missed the revenue guidance. However, see, they missed the revenue guidance, but they beat EBITDA guidance. So they became even more profitable, and they again surpassed their return on capital employed guidance. All right. And revenue is a function of input steel price, which are a pass through. Therefore, EBITDA and ROCE are more relevant. So, steel price rises, revenue rises, steel price falls, revenue of course falls, but EBITDA rose and return capital employed rose. So essentially it's saying that's more important. Now fiscal year 2026, revenue guidance of 17,500 crores, EBITDA guidance of 2,200 crores. All right, return on capital employed of more than 20%. And for the first half of fiscal year 2026, that is quarter one, quarter two, it has already achieved 7,925 crores of revenue, 1,186 crores EBITDA, and 24% return on capital employed. Now, if you compare the growth rates for this year, it is having, it is expecting revenue growth of 25% for fiscal year 2026. It is expecting EBITDA growth of 18%. It's expecting EBITDA growth of 18% for fiscal year 2026. So you can see some pretty nice growth numbers. Now, what we're going to do is take a bit deeper look into this growth. First of all, let's take a look at the order book. What is order book? Order book means the orders they already have from the customers. The current order book, 23,500 crores worth of orders that they currently have from customers. Here you can see where's the order book coming from. First, orders from line pipes. Line pipes, 1250 kmt, India plus US, DI pipes, then stainless steel bar pipes. Stainless steel bars and pipes is the biggest one, followed by line pipes, then DI pipes. All right, a lot of pipes, but 23,500 crores worth of orders. So that's a pretty big number. Hold up. Yes, the overall guidance for a longer term for the next 3 years, it seems, first is revenue guidance of 10-12% CAGR growth in revenue, more than 15% growth in EBITDA, okay, 20 to 23% return on capital employed, and they're planning a capex of 5,500 crores in order to expand the current production capacity to meet this guidance. All right, so we will cover this capex also. Then the net debt slash cash position is that they're net cash positive, which means net cash or net debt means that the cash and cash equivalents are actually more than their total debt. That's what net cash means. Net debt means the debt is more than their cash and cash equivalents. So net cash position, cash and cash equivalents are more than their overall debt, which is very good. So they are the largest global player in line pipes. That is very important. And you can see data centers is a word that's mentioned here. KSA, Kingdom of Saudi Arabia. They're expecting good growth from their Saudi Arabia market, from USA market. Data centers in US are expected to fuel demand for these pipes. India, water and oil exports. So pipes for these two things are important and expected to generate growth for the company. So let's go a bit deeper into how is it expecting that. First, USA. Now, HSAW, HFIW, LSAW, they are kind of pipes, the different varieties of pipes. I don't know the full form. But you see this asterisk? This asterisk shows, first of all these capacities are in km, TPA, tons per annum, km, all right. This 300 LSAW, what is it? It is the upcoming. You see this asterisk? That is the upcoming capacity. So it's adding 300 metric tons or MT, 300 MT of LSAW pipes for the US. And what is expected to fuel demand for the US market? LNG exports. So to actually transport LNG, you need pipes. So more LNG exports expected. Natural gas liquids and data centers. It seems that in order to power data centers, natural gas is needed. In order to transport natural gas, pipes are needed. All right. Total potential of 8 to 9 pipelines, 8 to 9,000 miles worth of pipelines needed in order to meet all this growth. Then it is the largest player in the US, so that provides some, I guess, a good market share and positioning for the US market. Then for the Kingdom of Saudi Arabia, there is Kingdom of Saudi Arabia. This light green is Welspun's presence. It is the largest player in the Kingdom of Saudi Arabia also. And I think MT means million tons. Is it million? I think it million tons. Wait, 1 million tons? No. Okay, 1 million metric tons. It means metric tons. I think so. Based now, DIP and LSAW, again, there are different types of pipes, but you can see this asterisk means the upcoming. They're actually expanding their capacity. They're adding these two capacities, 350 to 250. So you can see it is major capacity expansion from the current 500. And of course, there are different types of variety of pipes. So different varieties will have different realizations or like sales per ton, basically. So that is to be kept in mind. But it is the largest player in KSA. So already a good positioning. These greenfield projects, that is this 350 and 250 expansion, both of them are expected to be operational by Q1 fiscal year 2027, and impeccable track record with Aramco. Okay, and last but not least, we will talk about the Kingdom of Saudi Arabia, the Vision 2030. That is not what we're supposed to talk about. But you can see this, the Kingdom of Saudi Arabia Vision 2030. So Saudi Arabia is also expected to do very well for them. So this is it. This is all for Welspun Corp. Overall, historically speaking, it has not produced a high growth rate in terms of revenue, but post COVID, it has done pretty well. And in the near future, it is expecting to generate consistent, nice level, what you can say, consistent, decent level of growth. 10 to 12% is decent level of revenue growth, and more than 15% growth in EBITDA for the foreseeable 2 3 years in the future. And in order to fund this expansion or meet this expectation, these revenue targets, it is going for expansion in the US market or in its US business segment. Sorry, in the US and the Kingdom of Saudi Arabia production capacities. It is going for expansion. As you saw earlier, let us see if Welspun Corp, the largest manufacturer of large diameter pipes in the world, can achieve all these revenue targets, financial targets.